that? YouTube's not listening to that. Let's turn this. Let's start that. Let's go to here. Let's do this. Bam. Let's, that's not. Woohoo! What's happening? Just what time is it? Just the pin. How are you today? Yay! What's up, my man? Hit the lot. We're just trying to get online and add these different stations. Okay? Who's that? Say. Who's that? Yahoo! YouTube. TikTok. Twitter. Facebook. Instagram. YouTube down here. We are ready to go. Yeah, let's go. Hey, Ivan, how are you doing today? Good evening, everyone. This is Dennis from Dividend Stock Talk. Back to die. That's 10 minutes to the ad, and back to Dividend Stock. Took it down to that rise. That's predictable and consistent 1% to that and other issues edited at YouTube. Alright, is what it is. My other account is Recon. This is opinion on Alibaba. Ooh, from Julie and Bruno. So that, thank you, Julie. Jill and Bruno. Sorry about that. Alan, video, reconnect. That's YouTube. Have an issue with YouTube. So, please send me the chat and see if YouTube is working. This is the audio is not available. Yes, I have it out. How are you then? Imagine that! Somebody else knows you, dude! Actually somebody knows me too. Good. Ben the Redneck. Who's the lucky man? Someone's got to do that. Let's get started. I'm having issues with YouTube. Sorry guys, the issue with YouTube. So I don't know what it is. It is what it is. I have nothing to say about it. That being, the 100% said that. Settings. Brightness. And then there's a back. I like to have it bright. Alright, so, there might be no YouTube tonight. Terribly sorry. But I have nothing to say about that. Okay? I just hit the buttons, and that's. Okay. That being said, let's jump in and take a look. Now, other than we're looking at tonight is Alibaba. Audio and video not available. Why isn't it available? I could. I'm good. How are you doing? First, we're going to take a look at tonight is Alibaba. Don't ask me why. Somebody wants to take a look at it. Take it time. Alright. That's an SCHD. So Ryan, take a look at that a little bit. Alright. Alibaba. That's it. Look at it. Here's the high. Here's the low. Here's the standard sideways. And then I understood I had a big lawsuit with Alibaba in Europe. I don't know anything about it because I don't follow it. Because I don't pay attention to things that mean anything to me. And Alibaba is not on trade. So I don't pay attention to the news. Alright. So here's the high. So the benefit on 61, but that's at 230. Now, I don't have those dividends that much I do now. I don't know this is it. We might not be able to do YouTube on that one. Okay. So that's been based to Alibaba. Okay. If you like this kind of thing. So 30 minutes ago, that is the bad. There. Reconnect. Why am I having an issue with YouTube? I have no idea. Okay, so 30 minutes ago, look. There's the bottom. Shoot that, find the high, that. So we come back to the downside. So Alibaba doesn't look as if it will be a contender anytime soon. So about another minute or two before it actually looks halfway decent. So let's write it down. for 2 weeks from today. That's enough. Next on the list, Andrea, and I split it O2O, and then Ryan, we're going to take a look at SCO2, hydrogen and value, and a look at that term. But let's take a look at it, and let's put them down. O2O, Patrick. So Patrick, here's the high last year, 33.67, back last end of October. I'm having issues with this. This is just ridiculous. Okay, I got that. Okay, yeah, hypothetically, she should be working. Okay, so here's the high, here's the low, notice she says down, it's bouncing off of this field that we got down today. So Andrea, that is thinking. That is thinking on APA. For the last 30 days, it's pretty plain to see that the day today at 26, she jumps up to the bottom of it, 22, shoots up to 27.5, drops down, shoots up, drops down again, now at 27.5. Okay, a little bit of that in the dash. So she's definitely in the downturn. Now, that eventually, after the profits have been taken. So it's not really something I'm looking at. But I would take a look at Apache next week, after this clears up, after it says the rest of the dance is here, and it turns around and back up again. So it's something to take a look at next week, and it's already on the list. Let's take a look at next week down there. So last week at week, they looked at it. Last week we looked at it in that clip. We said they looked at it again next week, right? Next week, we're going to test out this today. That being said, now, Ryan wants to look at SCHB, live, SCHB. Ryan is going to look at this thing. Number one, I don't like it, it's a monthly stock, because I don't like monthlies. Monthlies, the numbers just don't work for me. They may work for you, and I don't dissuade anyone from buying a piece of crap if they want to buy a piece of crap. I probably shouldn't be saying that, because I do my president tries that. I just don't like what they say. Okay? Now the reason I don't like what they say, that's at the heart of the year at the moment, that's number one. Number two is the monthly options. So out of the monthly options, it's 63. Next month's 28.63. That's good. I've never seen that before. I haven't seen thirds of that. Look at the options here. 27, 27.33, 27.67, 28, 28.33, 28.67, 29, 29. That's the hell of those numbers. Serious problems with YouTube over there. Seriously. Okay? So, if it's part of that 28.63, the closest relative is 28.67. It's less than 30 cents. But that's not even 2%. That's rich. That's rich. I like that line. That's rich. That's rich. I have to hold it for 31 days. That's 5 weeks. 5 weeks. So 7 goes through to 31 4.5 times. That's 4.5 times you can't get 4.5 weeks. That's started. That's 5 started at 5. And it's only given 40 cents on a $7 stock. That's up 1.5%. Now they divide that by 5. So what am I doing? That is 1.5 divided by 5. That's 0.3. 0.3% food. How the hell did you do 0.3% food? That's it. That's it. Seriously, it does. So let's go and look at Yahoo Finance, because I like Yahoo Finance. SCHD, and let's actually look at that. SCHD, that's it. SWAT U.S. Dividend Equity ETF, SCHD. That's at 2863, that's fine. And the yield, 3.47. Now that's not for the week, it's not for the month, it's not for the quarter, that's 3.47 for the year. Why the hell would you invest your money into something that's paying 3.47? But it is. It really does that. We're going to go to the historical data. That's historical data. The historical data based on just what it sounds like. This is data from the past. Okay, that's that as far as you can talk. Now, what do I want to look at? I want to look at the dividends only. And then I want to look at all the dividends they paid. This is all about the beginning. And look what the beginning is. The beginning is 2011. So 2011, so how many years is that? That's 13 years. That's 13 years. 13 years of dividends. I like 2 decades, which is 20 years. So me personally, I would never do into that. I would never do something that's 13 years old. It feels almost criminal. Think about it. Legally, you can't do it until 18. I did 13 years. That sounds disturbing, it really does. Anyway, let's take a look at the dividends. Now remember, a dividend is a percentage of the profits that are paid back to the investors, and that's really not. When we buy the stock, we are investors. Okay, so let's take a look and see how well SCHD does with sharing the profits with the investors. That's us. 2011, 2004, 5, 7, 26, 7, 8, 8, 25, 8, 9, 8, 9, 9, 31, 10, 9, 30, 11, 24, 13, 11, 33, 34, 12, 9, 31, 37, 37, 9. Come on, seriously, what the hell are you thinking? Putting your money into this thing. There's no consistency with profits whatsoever. Now, this is real money we're talking about. You're here for a reason. Okay? We're talking about investing, we're talking about stocks, we're talking about dividends, we're talking about stock options. And we're talking about a simple, safe, predictable, consistent 1% per week strategy. That comes to over 50% per year. And then you ask me, what can I think about a piece of stock like this? But the reason I pay a piece of stock is there's no consistency with the profits, none whatsoever. The yield is 3.47. You can get better yield putting the money to the government. The government's giving 5% yield. Why the hell would you put it? Why would you give your money to a computer? You might think it's not. It is. An electronically traded fund. You can call it whatever you want. ETF, electronically traded fund. People say, no, it's exchange traded fund. But what the hell do you think the exchanges run on? They run on computers. Haven't you seen the Terminator and that? They're coming out of Terminator 7 to Terminator 12 or something like that? Yeah. I don't trust computers as far as I can throw them. That's what I had to sit down. I did. That being said, SCHD, sorry dude, I don't like SCHD, period. I don't. Okay? Now there's hold on. Let's let it go. 9,713 different places you can put your money. That's just here in the U.S. You get worldwide, there's like 50,000, over 50,000 different places. Mother out there, how you do it? Over 50,000 places you can invest your money worldwide. So why would you put your money into a company that has no consistency whatsoever on their profits? That's number one. Number two is the monthly option of the stock. The numbers just don't work on monthly option of the stock. That's number two. Number three, they're 13 years old. They're still underage, in my humble opinion. So I like 20 years. 2 decades. 20 years of consistent profits. That means every year, the dividends get higher and higher and higher and higher. And then after that, the dividend turns 55 decades, 50 years of increased dividends. The dividend aristocrats, 25 years of increased dividends. The dividend champions, 25 years of increased dividends. The dividend contenders, 10 to 24 years of increased dividends. That's for that list right there. That would give you 300 companies that consistently increase their dividends for more than 2 decades. Rather than how we can put it into something like this. But then I say together, what the hell are you thinking? Seriously, this is real money we're talking about. Why would you put your money into something? You know that? It is what it is. It's ask the desire. Their power to the better. So, thanks. Let's keep on moving. Let's keep on keeping on. Got to make the best of bad situation. I understand these questions very tired. Very tired. Alright, so that. That long time no speech, just the thing that that under MIO. Marathon, Alright, so MIO, I select MIO. MIO, Marathon, big background today. I say Andrea, interesting, let's take a quick glance at it. The high, the election is down, up, trailing. Now, I don't like saying sideways, but that's basically what it says. It's going between the 26 and the 29 and just then, and a trail up to the side. I've been saying sideways because they're down both sides, but the left and the down, so that is. Anyway, a year ago, we're sitting at 28.36. The bottom of the year was in the middle of January, and that is 21.76, way down here. And she shoots up on the top of that rock, the top, 30.06, and that was an open. Now this is happening in the last 30 days. The last 30 days, those are the last 30 days, 30 days ago. We're sitting right at 26.14. She went up, she went down, she went up, she went down. Look at this graph. Now on here, I love a graph like that when it's coming to the downside. The reason being, then system finds its bottom, turns around and does that graph is in effect. So we're looking at the 27s and the 28s in about a week or two. So let's put Marathon Earth, the next group, to take a look at it then. Just look how close it is to the bottom. So through that then to 35 is perfect. Then to 35, 26, maybe. No definite, we don't know. Okay? There's a 2. Let's check out the 2. 26.65. There it is, that's it. 26.65 is the last 2. 26.77 is the bid. 26.97 is the last. The mathematics and pictures that come out. Okay, that's not guaranteed, not definite, but there's no picture that come out. Okay, fine. So, 26.65, the 27th, and then the 30s, and for sure, looking at the wrong date. So I don't look at that, I don't look at that, I don't look at this right here. So 3 days on the 27th, it's going between 11 and 35. So that's possibility about 51%. I didn't count on it, but there's that. Then it goes out as a tricky bit. Because what we're doing here, we're showing time. That's what credit is. You buy a stock, you set somebody the right to buy things for the exact same price you paid for it. What we are collecting is a premium. And the premium, okay, has to do with time value. Time value, okay, time value decays on Monday, you lose 20%. Tuesday, you lose another 20%. That's 30. By Wednesday, it's 60%. Thursday, 80%, and Friday, 100%. So, time value is only one component of an option. Now, if you really want to dive deep into that makes an option the value, yes, a block says pricing method. The access option pricing method. Yeah, it's confusing as hell. It really is. I don't know what's going on with I'm going to set it down and start it over again. We're going to shut down YouTube because it had issues with it, and I'm going to restart it and hopefully it will start back up normal. Listen, I'm sure we can live without YouTube for the night. I mean, that YouTube down here on the big screen, we just had a smash thing for YouTube. It is what it is. Anyway, let's keep on progressing. So Marathon is, I'm going to put that.
I'm looking at it, MRO. I'm looking at it, and it looks, that big gap here, looks like we only got another day or two before it finds the bottom. Okay, let's see if this works. Whoops. Let's see if this works. Now, why did that just turn off? Damn it. There we go. Okay. There it is. Give me a couple of seconds, see if we can get YouTube working, because, you know, want to be fair to everybody. All right. There we go. Hey, it is Vivek Ramaswamy. Stream interrupted. Resume. There we go. Let's try it. Okay, so we're going to see if we can resume. It may not. Don't know. All right, so, Andrea, I like this. We'll save it. We'll table it for next week. We'll come take a look at it again. All right, Dutch Master Jew. SoFi. Why would you want to look at SoFi? SOFI. SoFi. Yep, that's going to be a no. Reason it's going to be a no? Look where it is. That's the high of the 30-day period. I don't like buying at the high because you're standing on a ladder waiting for another taller ladder. It doesn't make sense to me. Okay, why buy it at the high? You make money buying low and selling high, not buying high and waiting for it to go higher. Yeah, I don't play that game. It just doesn't make sense to me. Why would I buy it to high waiting for it to go higher? I started the other one for my financial stuff, and this one for farm stuff got lazy. Alrighty, Andrea, British Petroleum. You're coming up with a good one, aren't you? BP. I like British Petroleum. I remember when British Petroleum. Ooh, another gap down in Britain. Look at this. This is the Andrea. What are you just looking for things that gap down? That's the third one you showed me tonight that all gap down. Okay, we're having issues with YouTube. No YouTube tonight. No YouTube for you. All right. So British Petroleum. Here we go. High of the year, low of the year. Where was it? Where is it? What's the direction? Down, up, down. Okay? Doesn't look good, but let's take a gander at it. Been telling everyone not to worry about Walgreens. Soon as those stores close, profits will be crazy. That would be good. Okay. Let's keep on going. So, British Petroleum right now is at 30.74. The 31s are going for, no, maybe next week. What do the 31s for next week look like? Okay, barely 1%. Okay, here's something interesting right here. Another tip. The last trade, 30.74. The bid, 30.85, 31. Looks like the market maker is going to push this one up tomorrow also. All right, we're just having no luck at all with YouTube. And I don't know why that is. All right, so last 30 days. Check it out. Up, down, up, down, up, down. Big gap. This thing should be sometime next week or sometime this week. This will find its bottom, turn around, and go back up again. Because that's basically all stocks do. They go up, they go down, they go up, they go down. So where's the bottom? Well, we had a big drop here. Okay, the market maker's already shown us that he is going to push it up tomorrow by looking at the bid and the ask compared to the last traded price. So we are going to put British Petroleum down there. BP. All right, that being said, what else we want to look at? Walgreens. Oh, A Melit TM. What the heck is TM? Does anybody know what TM is? That's not Toyota Motor Company. It is another down. Okay. A year ago, 179, high 255, the low 157, last 30 days. I don't like all these gaps. Look at them. Gaps everywhere. 176, 190, 169. I don't like Toyota. It's a monthly. It's going to be a no. Sorry. Okay, Malit, no. Andrea, OMG, Walgreens. Yeah, let's take a look at Walgreens. WBA. Nice. Lovely. Okay. A year ago, 2341, double top at 2705. Look at the bottom a couple of weeks ago on the 25th. Okay, here's right here, the 25th. Here's the bottom. Up, pulls back, and keeps on going. It gapped up. Yep, this you're gonna see some profit taking soon. No. Look at gap up, all that volume. Now look at the movement from the day. 960 to 1042. That's not even quite a buck. That's a 10% move in one day. 10% move in one day. Yeah, that's going to be profit taken tomorrow or the next day. Okay? However, let's keep on going. All right, that being said, the 1042 is the current price. The 1050s are going for 24 cents. Cool. Okay, I'm into this one at 1150 in this account. Okay, 1154. Okay, I sold off. What the hell did I sell? The 9s and the 950s. Yeah. Okay. Well, we'll see what happens with that. Gallant, dude, I haven't heard or seen from you in weeks. What's happened? Hope you're all good. PPG. Interesting chart. I like that. That's a good pick, Gallant. Here we go. 134.25. The 135s are going for 115 to 130. That's not looking good this week. Holy cow, look at the numbers. The last trade, 129.87. We should be looking at the 130s. Oh, yeah, not the 134s. Look at the bid in the ask. That's a $6 spread. Yeah, no, not a $6 spread. All right, so let's take a look. A year ago, 129 topped out at the end of the year last year at 151. Okay, so from 151, took about 9 months to find the bottom. Well, the bottom is right here, 812 at 118. Okay, here's the bottom right here. She goes up, down, up, down, up, down, up. So it's a nice movement right now. Let's take a look at the last 30 days. It's a nice pick. Last 30 days, here we go. Check that out. 30 days ago, 128, up, down, up. There's your high, 137, drops down to 120, so in that area. Now she's going back up. Great invitation to jump on in. So the 129s are going for 320. I'm going to write this one down for tomorrow and see if I have any money available. That's a good one. Now, I'm going to check my account and see if I can scrape up some money to buy some PPG tomorrow. I like that one. That's a good one. Nice going, Gallant. Now, what does this normally do this time of year? Well, normally, look at that. That's freaking crazy. Look at that. Here's where we are right now, the blue dot. Okay? Here's the average movement over the last 10 years. Well, if it's done this over the last 10 years, more than likely it's probably going to do the same thing again. So why not jump into it? Montreal 713, how are you today? Cool beans. All right, I'm having major issues with YouTube. That's weird. Let me see if I can get YouTube over on this account over here. Alrighty. Nope. Nope, I cannot. TikTok is the only thing I can do on this phone. Well, ain't that a bitch? Alright. Or this week. Well, yeah, this week doesn't look... Well, yeah, I am going to do it this week. Didn't I already say that? I did. Yeah, so this week and maybe next week. Look at where she is. Okay, there's Monday. Okay, 2 days to the upside. Great. There's Tuesday. So we have from here, from 129, all the way up to 137. Well, look at your bottom. Way down here, 126. Well, it's only $3 here, but look how much is here. That's $8. So you have $3 to the bottom and $8 to the top. Where do you think it's going to go? And we've seen the seasonality. Seasonality is crazy. Okay. So I wrote it down and I circled it. So let's keep going. Eric, we already looked at Walgreens. What stocks do you like at the moment? Well, I like Walgreens. I like PPG because we just looked at it. Real estate flipper. We just looked at APA not even 15 minutes ago. Can you check Home Depot? Oh, Home Depot, dividend king. 50 years of increased dividend, and it's going to be a big fat no. Hope. The reason why it's going to be a big fat no, it's at the high of the year. Why would I want to buy something at the high of the year? That's where I want to sell. Okay, I'm not looking to buy something to hold on to it forever. I'm looking for cash flow. That's it. Simple, safe, predictable, consistent, 1% per week. That's what I'm looking for. 1% a week is 50% per year. I like getting 50% per year. Not very many people can do that consistently. So Home Depot, even though I like the company, is at the high of the year. $415.99. Well, 415 is going for 320. That's not 1% for this week. So what does next week looks like? Next week's looks like 565. Well, yeah, I have to buy it tomorrow and sell next week's. Not this week, next week. Okay, because you always got to look at the numbers. What am I buying it for? What am I selling it for? What is my premium? What is my profit? Is that profit going to be 1%? I like going through this little math problem every time I look at something. Well, first I want to find out where's the high, where's the low, where's it going. It's at the high. Yeah, it's going to be a no. I don't like buying at the high of the year. But what I'm going to do is I'll put Home Depot 3 weeks from today. Give it some time to pull back before I take a look at it again. Don't. Twisted Philly, you have said this endlessly. Yeah, I do. Okay, so Twisted Philly, if you're looking for me to say something new and different, yep, you're barking up the wrong tree, brother. It's the same thing day after day after day. Okay, now I try to tell people this trading strategy is boring as hell. It's repetitive. I look at the exact same stocks week after week, month after month. Nothing new, nothing interesting. I'm looking for a simple, safe, predictable, consistent trading strategy that gets me 1% per week. Now, I've showed you over and over and over again that I do make about 1% per week. We can take a look at my trades so far for this year. Okay, I show you my trades. I don't hide anything. Look, account number 1. 2.3%, week number 39. Week number 38, 3.67. Week 37, 1.86. Week 36, 3.6. Week 35, 3.6. Yeah, I already said that one. Week 34, 8.1. That was crazy week. Okay? Week 33, 2.8. 3.1. 2.8. 3.3. 2.2. 5.2. Now this is on an average basis. Each one of these trades you see here, you can look at all of my trades. Look, Macy's, Riot, Marathon, MPW, Macy's, Marathon, Riot. Okay, so I only did like four different companies that year. But look at these are all the dividends, the premiums I've collected. Okay, so I show you all my trades. And it's boring as hell. It's the same stocks week after week after week. Every once in a while, somebody will come in and throw something new into the mix. We'll take a look at it, see if it's profitable, see if it makes sense. That's the number one thing I want you to take away. If you don't learn anything else from me, the number one thing I want you to learn is, does it make sense? Okay? The rules are very simple. Okay? Rule number one, never buy something you do not understand or you do not want to hold on to. It just doesn't make sense. Rule number two, never sell at a loss. Rule number three, and this is a big one, and sometimes, some strange reason, people just don't grasp it. Okay, there's 9,714 stocks. American stocks traded on the American stock market every single day. I don't want to invest into anything that's not consistently profitable. Why can't people grasp that? Why are they buying stuff that looks horrible when you take a look at all the actual numbers? SCHD, we looked at it a little while ago. 3.6%. The dividends are atrocious. They don't consistently increase whatsoever. Okay, and the options on them are horrible. So why do people invest in them? It boggles my mind. Mark Sherman. Yeah, Walgreens did have a pretty good day today. Hope we looked at Home Depot. Home Depot is going to be a good idea 2-3 weeks from today. Not the same. Ivan. Yeah, definitely wants to drive it in. It's just, hey, check it out. Oh, come on. My hat disappeared. That was cool. Okay, Techno Nerd. How do you feel about Ford? I actually have some Ford. So let's take a look at Ford. Alrighty then, here's Ford. Okay, so Ford, the high, the low, where was it, where is it, what's the direction? Down, up, drop, and then back up again. Here's where we are right now. Okay, 1084 was the last trade of the day today. Tomorrow I can buy it at 1087. Okay, the market maker is going to be pushing it up. See the numbers? Okay, market maker, when he has numbers like this, 1084 was the last trade. What you can sell it for? 1084. What you can buy it for? 1087. He's trying to push it back to the upside. Well, great. Well, the 1087, the closest one's going to be the 11. Not this week, it ain't. Sorry. So let's take a look at next week. Because Wednesday is a tough day. Because there's only 3 days left, which means you only have 3 days left of time value. You lost 40%. Okay, Monday you lost 20%. Tuesday you lost another 20%. That's 40%. So you have 3 days left of time value to capture this week. 3 days. It's not going to do it for Ford this week. But for next week, you get 14 to 16. That's well over 1%. If you like Ford. I like Ford. Ford is currently trading below the book value. Now, if you don't understand what the book value, well, you probably should do some research on it. The book value is basically if they liquidated everything. Look at the balance sheet. What do we owe? What do we own? Owe, own. Okay, so if Ford take all their assets and sold all their assets, I believe it's somewhere around $14 a share. That's the actual book value of the company. But right now, the stock is trading for $10.84. I know high school students who have $10.84 in their pocket. Okay? High school didn't even dawn on me. But here's the thing. $10.84, I can sell the 11s, get 14 cents. That's over 1%. If it goes above 11 within the next week and a half, great. I'll be back all in cash again and get my 1%. That makes sense to me. I love Ford. I've been trading Ford for about 15 years. I don't buy it and keep it. I buy it, grab my profit, say thank you very much, and move on with my life. Because there are other things to look at. General Motors, IBM, Home Depot, Lowe's, U.S. Steel, a whole bunch of different companies. Why would I want to buy something and hold on to it for a long period of time? Look what it does. It goes down. Why the hell would I want to buy it? then it goes up, then it goes down, then it goes up, then it goes down, then it goes way up, and then it goes way down. You can look at every single stock, they all do the exact same thing. They go up, they go down, up, down. So why not buy it, sell it, buy it, sell it, buy it, sell it. Keep your eyes on it. I like when the company is getting ready to pay their dividend because stocks have a tendency to increase in value right around the dividend date. That's why I like dividend stocks. And why I like dividend stocks that are consistently profitable, well, worst case scenario, I had explained this to someone the other day. So why do you invest in dividend stocks? Because I said, absolutely worst case scenario, if the stock does this, tanks, well, at least I'm getting an increased dividend every single year. Now, most people buy stocks and hold on to them for years, 1 year, 5 years, 10 years, 20 years, 30. I talked to some guy, he owned stock for 30 years. I said, well, that's great. How often have you doubled your money? Anyway, that's Ford. Home Depot, we already looked at that one. What stock is this one? Russman. F is for Ford. Can you say F, boys and girls? Yes, you can. Let's say it. F for Ford. Anyway, Gallant, you want to take... Oh, wait a second. Gallant wants to take a look at Philip Morris. Hey, Hollywood's here. What's happening, Hollywood? All right, Philip Morris. Now, we took a look at Philip Morris earlier, and we said it'd be good not this week, but a couple of weeks from now. Okay, so here's the high, here's the low, here's where it was, here's where it is, this is where it's going, blah, 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 all that kind of nice and fun stuff. Look, it goes sideways, or should I say it channeled, then it went up, now it pulled back, now she's going back up again. Okay, great. Well, let's take a look at the numbers. What do the numbers tell me? Well, currently, before I even look at the chart, 120.72 to 121's 50 cents. Not this week. Next week, 220. Hell yeah, why not? For next week. All right, let's take a look. A year ago, 93.01. We bottomed out last November. 87.14. That was the bottom. Now from there, up, down, up, down, up, down. Typical stock stuff. Up, down, up, down. That's what stocks do. Okay? Big jump right there. There she is. Johnny, tell her what he's won. 9.9. Okay? That was a couple of weeks ago. The 9th of September. There's the high right there. 128.22. Okay, fine. Then she drops, retrace, drop, retrace, drop, retrace, drop. Here's the 30-day bottom right there. I like doing that. Watch that. Boing, 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 boing. Yeah, anyway, here's the bottom right here. And what is that? That is 10.4, 2 weeks ago. Okay? 117.53. Here's the bottom. 117.53. Look at this. 1, 2, 3, 4, 5, 6, 7 days to the upside. Look how much room it has. That's a lot. That's a long runway to have a takeoff. You like that one? We have an airline pilot in here. That's a long way for a runway. All right. So that being said, what are we looking at? 120.72. The 121s is paying 220. Let's do a quick trade for those of you that are new here and haven't seen a trade yet. Well, let me show you how it's done. First, we already agreed to 121, okay? Because right now the price is 121.72, the closest strike price. That means what can I sell it for? 121. See, here they are, $1 increments. Okay, 120, 121, 122, 123, 124. Well, if I'm buying it at 120.72, I have two options. I can do the 120s or I can do the 121s. Well, the 120s are going for 275. That's over 1%, safer bet. So here's where you have to do some thinking. All right. Now you got a bunch of different trades you can make. What you can't change is the purchase price. Whatever the purchase price is whatever it is. That's what you can buy it for. Now you can always do a limit order. Say, you know what? I don't like 120.72. I want to do 120.50. Well, you can put it in there. Then you have to wait for the market maker to decide whether or not he wants to accept it. Me, I like going straight to the market. I don't like quibbling over pennies. If I'm making a 50% return per year, with only 5 or 10 minutes a day, because, hey, this is Jane from Dividend Stock Talk, brought to you by the 10-minute trade. It means the trading strategy was originally created for my 9-year-old daughter back in 2008. She jumped up on my lap and said, Daddy, can you teach me what you're doing? I said, sure, why not? At 9 years old, it had to be simple. Safe, predictable, consistent, and no way for her to lose, because we all know what happens when a 9-year-old starts to lose. She starts to feel bad. She starts to cry. I feel like shit. Mama gets involved. I'm sleeping on the couch for a couple of weeks. I get some peace and quiet. No. Anyway. No, it had to be simple, safe, predictable, consistent, and no way for her to lose. So it came with some rules. Rule number 1, never buy something you don't understand or you don't want to hold on to. Buy it as if you're going to buy it and hold on to it forever. That's the intention of when you buy it. Never buy something you don't like. It common sense. Why would you buy something you don't understand? I mean, think about it. It makes no sense. All right, so rule number 1, never buy something you don't want. Okay? Rule number 2, never sell at a loss. It defeats the purpose of investing. Why buy it, sell at a loss? That makes no sense. Explain that to me. Okay? Well, stocks going down. Yeah, stocks always go down. They do. They always go down. Look, it goes down, then it goes up, and then it goes down, and then it goes up again. You can take a look at any stock chart. They go up, they go down, they go up. The idea, or ideally, don't panic. So what if it goes down? Big deal. Remember rule number 1, never buy something you don't want to own. If you don't want to own it, don't buy it. I mean, come on, think about it. If you don't like it, you don't understand it, don't buy it. It's that simple. All right, let's move on. Rule number 3, make sure the company's consistently profitable. This one boggles my mind when people ask me to take a look at something, and then I go in to give my opinion, and I look at the numbers, and the numbers like, what the hell was this person thinking buying this piece of crap? There's over 9,700 different companies available. Why would you buy one that is not consistently profitable? All right, let's get off that one. Let's take a look. Philip Morris, 121. Let's actually do a trade. Okay, so we're actually going to do one. So let's get rid of this. We're going to change it from single, because this is giving me numbers buying it as a single option, if I'm going to buy an option or sell an option. I want to do covered calls, which is right down here. These are all the different trading strategies. Okay, I don't cover these here. I only cover one and one only. Okay, I'm doing this as a favor for you guys, showing you that, allowing you to see over my shoulder what I'm doing. I'm doing this for free because I feel this is important enough to share with everyone. At some point in your life, you will say, wait a second, I have all this information up here. I want to pass it along. Okay, so my grandchildren, I only have one at the moment, he's 4. I would like to think my grandchildren will be watching these videos sometime in the future so that they understand money also. Because the stock market has been around for over 400 years. Who am I to think that when I'm gone it's going to cease to exist? No, this information will be valid even then. Because dividend capturing is a strategy that's over 400 years old. People would buy a stock, capture the dividend, sell the stock, buy another company, collect that dividend, sell that, buy another company, collect. Dividend capturing has been around for over 400 years. So we just bumped it up a notch because they introduced options in the 1970s. Okay, so before the 1970s, the only opportunity you had was buy the stock, capture the dividend, sell it for a profit, buy another one. But nowadays, it's so much easier. So I'm kind of hoping this here is a kind of like a documentary for my grandchildren once they get here, because some of them don't even exist yet. So I'm kind of hoping that's what I'm doing it for. So I'm only covering one here. Now I do have a morning trading group, which I do some of the other trading strategies. Okay, but here it's just going to be the covered stock. So let's go over the covered stock. We're actually going to do a trade right here so you can see how it works. As soon as you click on the button, everything changes. See that? Okay, so remember we talked about it. We like the 121. Not for this week. See, this is this week. See the date? Very important. Very important. Because most beginners will lose money by hitting the wrong button or... Ooh, who do we got here? Hey, Sawana. Sanhara. I can't even pronounce that. I'm terribly sorry. So, not this week. Now, up here it says 18 October. Well, these are for this week. We don't want that one. So let's get out of that one. 25 October. That's the one we want. 25 October. All right. Now, we said we like the 121 right here. See, 121. Come on over here. We're going to buy it right there. And there it is. There's the trade right there. Now, I'm going to do just 100 shares because some people freak out when they look at, 1,000 shares. Whoops. Okay, I'm going to do 100 shares. Now, this is a double trade. What do I mean by double trade? Well, I'm buying the stock and I'm selling the option all in one swift move. You ever heard that expression, 2 birds with 1 stone? Well, 2 trades with 2 positions with 1 trade. How you go? Same thing. All right. So I'm buying 100 shares of Philip Morris and I am selling 1 contract at 121 against the stock that I just bought. Now, when I'm buying it at first, I always like to do market order. Because when you're doing a market order, before the market opens, first thing in the morning, it will fill at 9:31. Okay, that's as soon as the market opens. It will fill at 9:31. And the profit is already built in. So, I hit confirm and send. Now, before I hit the send button, before I send this off to the market maker, I want to read it. Now, when I say I want to read it, I want to read it out loud so I can hear myself saying it. Because your eyes will play tricks on you and you will hit. Okay, you may not think it. Okay, but I've been trading for over 20 years and I still hit the wrong button. Every once in a while, I'll hit the wrong button. I'll click the wrong, Read it out loud. Now, I'm going to read it out loud and listen to what it sounds like. I am going to buy 1 covered PM, Philip Morris. 100, that's the weeklies. 25 October 24. That's not this Friday, next Friday. The 121 call option against the Philip Morris stock at the market to open to open. Now the reason why it says to open, because it's 2 trades. I'm buying a stock, 1 trade, and I'm selling the option, 2nd trade. So to open to open. So eventually you want to close both of those trades. Eventually. So here we go. First line that pops up underneath the order is the break even. Anything over the break even by the date of expiration, which is the 25th October, next Friday, not this Friday, next Friday. Anything above the 118.12 is going to be a profit. So 118.13, 118.14 is going to be a profit. But here's the nice thing about it. The current price at this moment in time is 120.72. Well, that's good because stocks only move 3 ways. Up, down, or nowhere. Sideways. I hate saying sideways because they don't move sideways. How about they don't move at all? 3 different ways. Up, down, or neutral. All right, anyway. My maximum profit on this trade. Now remember when I say I want simple, safe, predictable? This is telling me what I'm going to make even before I make the trade. Well, that's predictable. It's not like I'm buying a stock and waiting for it to go up and guessing what I'm going to make. No. This one here is telling me what I'm going to make before I even do it. All right? Making $288 for 1 trade. Okay, so if you want to make more than that, well, then you have to do more than 1 contract. Because right here, it's only 1 contract. Okay, and the contract, now here's what another thing you need to understand. You don't need to, but it's a good idea to understand it. There's 2 different prices here. Okay, cost of trade including commissions, $11,812. If it was an all cash account, that's what it would be costing me. Now, the next line says buying power effect, 5,791. Well, this particular account that you're looking at is a margin account. What is that? Well, that means half the money is mine, half the money belongs to the broker. I am borrowing that money from him. I am trading with borrowed money. Highly, highly, highly risky. Do not do margin until you understand the risks along with it. Now, I've been trading for a very long time, so I have no problem with the risks. Okay, so I'm borrowing the money at an 8% return. So if I borrow 100,000, at the end of the year, I have to give the broker 108,000. So I better know what I am doing, which I do. Okay, and for those who are in the morning trading group, you understand it also, and I walk you through the whole thing so you feel a little bit better. But do not do margin until you understand the risks. They actually have a book called Risks and Characteristics of Option Trading. I think that's with margin also. Okay, anyway, here we go. So let's do the math on both of those so you understand what the rate of return on both of those are. So we already know what the profit is, 288 on this one trade. So clear this, $288. Now, to find out what my rate of return is, I have to divide it by the investment that I'm making. So currently, for 100 shares of Philip Morris, it's 11,812. It may sound like a lot, but once you get to a certain age, you'll see that, I'm 60. So when I say I have, $100,000, $200,000 in my retirement account, well, that's normal. Okay, so if you're in your 20s and 30s, yeah, maybe you have 5, 10, 15,000, maybe not as much. So maybe you won't be looking at Philip Morris, maybe you're looking at something a little bit different. But dividend capturing still works with it. Okay, anyway, let's keep on going. So I'm going to do it twice. So you see what it's like in a cash account, and then you'll see what it's like in a margin account. Okay, so a cash account, 11,812. That gives me a grand total of 2.43%. Now you may think 2.43% is not a lot of money, but this is one of the safest trading strategies there is. You're buying a stock, you're selling it to someone else for almost the exact same amount of money you paid for it, and they are giving you a premium. You're signing a contract. Well, it's kind of, you're not really signing a contract, but once you do it, it's a contract between you and the market maker. You are guaranteeing the market maker that you own these shares. You have the right to sell an option against those shares. It's a legal binding contract. Okay, so you'll be making I would be making 2.43% if it was an all cash account. Now let's look at the numbers. If it was a margin account, okay, profit's still the same, 288, and we divide it by the margin requirement, which is 5,791. 5,791. Okay, so that is a 4.97%. That's almost a 5% trade for 1 week. Well, here's the great part about it. Well, number one, Philip Morris has been in business for over 100 years. Okay, number two, they have increased their dividends consistently. Number three, the stock, we already looked at it. Let's get out of here. Get out of there. Let's get out of there. Let's get out of here. Now, we already looked at the chart. We already have a good idea of where the stock is going. Okay, 30 days ago, we were here, 122. We jumped up to 128. That's the high of the 30-day period. What happens at the high? When a stock hits the high, I can tell you right now, if I owned it and it's right there, I'm going to be selling it and taking profits. That's what investors do. We're not here for brownie points. We're not here for social circles. We're here to make money. So if I like Philip Morris, gets a high, I start taking my profits, and then the stock drops. Okay, it drops to a certain point. You will see it all the time. It will drop to a certain point, and then you have people like me say, wait a second, Philip Morris at 118 Hell yeah, I'm going to buy that. So we start buying. What happens? It starts going back up again. That's all they do. They go up, they go down. All right, anyway. So, Philip Morris, over 100 years old. They consistently increase their dividends. The numbers, 2.5% for 1 week. Great. On margin, it's 5%. Hell yeah. Okay, it's in an upward trend. It's been trending up for the last 2 weeks. And look at the distance between the 30-day high and the 30-day bottom. The 30-day bottom is 118. 30-day high, 128. That's a $20 difference between the two. And right now, it's at 120. It's only $2 above the low. But look how far it is between the where it is now and the high. That's $8. So $8 to the high, $2 to the low. It's going to the upside. But it always comes down to the very last question. Do I like Philip Morris? Do I want to own Philip Morris? Do I want to own Philip Morris at this current price? I can't answer that question for you. Each and every one of you out here are totally responsible for your own decisions. Whether you decide to say, you know what, I'm ready to step up and take control of my own money and get possibly 50% return. If you follow me every day, you see everything I do. I don't gatekeep anything. I don't hide anything. You ask me an honest question, I'll give you an honest answer. Okay, there are a lot of people here that have been trading with me since January, since February, and they make money consistently. Okay, I also have people that get in here and then they panic and they do something like they say to themselves, why did I do that? Anyway, besides the point. Number one, does it make sense? Do you want to take control of your own money? And there's nothing wrong with it if you want to give it to a money manager. Say, hey, do it for me. You're not going to get the 50% per year if you do it yourself. Most people spend more time planning a family barbecue than they do with their own personal finances. Okay, I volunteered. Nobody forced me to do this. And believe it or not, I'm really not getting paid to do this. Okay, I'm here every single night to show you how to do it. Now, since January, I think I missed 5 nights. I used to say it was only 2. But the hurricane, no electricity, no internet, no choice. Anyway, first 2, I was sick as a dog, had to take someone to the emergency room, and then the last 3 was hurricane. All right, cut me some slack. I've only missed 5 days all year. Anyway, Philip Morris, I like it. Now, for the fun of it, what we didn't do yet is take a look at the seasonality. What does Philip Morris usually do this time of year? Okay, well, here we are right here. Nothing big. She's just going sideways. Sideways for the next couple of weeks, and then towards the end of November, she bounces to the upside. Okay, not going down. I love sideways. Sideways is great. And I hate saying sideways. I really do. All right, so that's Philip Morris. Gallant, that was a good pick. Love it. All right, let's keep on keeping on. FedEx. FDX. Gotta love FDX. Oh my goodness, look at that movement. Down, up, down, up, down, up, down, up, down, up, down, up. Yeah, predictable movement. Gotta love it. All right, so currently at 265, 266 is 267. Wow. Okay, there's our 1%. That's more than 1%. Okay, currently at 266.29. The 267 is going for 330. 330 on a 266 stock. Yeah, that's more than 1%. Why not? Some people are just really good at talking and love to hear themselves talk. Actually, I was shy as hell in high school. Okay? Elementary school, junior high, high school, nope. I kept to myself, barely talked at all. I put myself in a position to talk, to get my point across. Anyway, Texas Roadhouse, you really got to give me the ticker symbol. Rich Bruner, sorry, SCHD. Rich, I'm going to ignore you, Rich. I can't even believe you want me to take a look at SCHD. Hell no. Mervades. No SCHD. No. Okay, and I don't know if he's asking me why. No. RYLD. Oh, come on. Barbara, RYLD is almost as bad as SCHD. Doesn't have enough time value to them. Haven't been around long enough. The dividends really aren't that great. And I don't even know which one is that? RYLD. RYLD. Definitely no. It's a monthly. And I don't like monthlies. The reason why, Barbara, I don't like monthlies is they just don't pay the same amount of money. Ask yourself a question. If you walk into a store, okay, and you see value here, here, and here, okay, but over this side, no, 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 why would I want to look to the left if it's always going to be a no, no, no? Okay? RYLD. Yeah, no. Sorry. I don't do monthlies because they just don't pay the same. I like a consistent, safe, predictable 1% per week. RYLD won't give me that. It's going to be a no. Sorry, kiddo. Let's keep on going. What do we got? Holy shit, I got 99 questions. 99 questions? Uh-oh. I got carried away, didn't I? RYLD. Nope, 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 nope. Okay. Bambo, do you use your stocks as collateral and then borrow money to invest? Nope. Good question, though. Can you give some examples? All right, we just did one. What do you think about SMH? What the heck is SMH? And if I say what the heck is something, it's usually going to be a no. All right, VanEck Semiconductor ETF. ETF? I don't like ETFs. I don't like giving my money to computers. Okay. But I'm here. I'm going to show you SMH. SMH. All right, VanEck Semiconductors. Interesting. Okay. Now, Muvadi's. Muvadi? Is that right? Muvadi? Okay. Jill, you like that one and ask for a recital? All right. I already said I don't like SMH. Here's another reason why I don't like it. It only pays once per year. One dividend per year, that's it. So let's take a look at them. Okay, 35, 33, 32. It's going backwards already. Not a good start. 57, nice. 29, 70, 80, 106, 75, 79, 120, 104. Okay, so why, okay, number one, 2012. That means it's only 12 years old. 12 years old. 12, did I say that right? 12 years old? That's not 20. Okay, think of it this way. If you're an adult and you're going after something 12, yeah, no. Sorry, that's creepy. I can't even believe I use that as an analogy. No, it's only been paying a dividend for the last 12 years. But look at the dividends. 35, 33, 32, 57, 29, 70, 82, 106, 75, 79, 102, 104. There's no consistency there whatsoever. None. 12 years of increase, 12 years of dividends. I didn't say increase. 12 years of dividends, and there's no increase whatsoever all over the place. Now, I'm assuming you're not retired yet. So when you're retired, you need a steady income. Income that doesn't fluctuate. An income that increases along with inflation. Well, this company here that you just gave me, that up, down, up, down, up, down. No, that's a no. Sorry. SMH? No. Home Depot, we already did that one. Jill, thank you for that idea. Maybe we'll do that one. I'm scared someone will mention another dumb stock and we'll lose. I'm terribly sorry. You know, I have a whole list of stocks that I would like to go through. But you guys keep giving me stuff to take a look at, and it's like, why? Don't you guys do your own research? Think about it. 20 years of consistent dividend increases. Well, that's easy. Dividend kings, dividend champions, dividend aristocrats, dividend contenders, Warren Buffett's list. That's over 300 companies you can pick from. But no, you guys give me lemons to look at. You know, it's like, anyway. What's going on with Sirius? SIRI. Did we look at, no, we didn't look at Siri yet. Okay, so here's Siri. High of the year, 57. Bottom of the year, 22.50. Currently at 27.25. The 27.50s. Whoops, that's, yeah, next week. 27.50s. That's 64 cents a share. That's over 2%. I like 2%. I don't know about you guys. Now, the question is, do you like Siri? Do you want to own Siri and hold on to it for however long you want to hold on to it? And now, the reason why I look at Siri, okay, is because it's on Warren Buffett's list. It's not on my list. It's on Warren Buffett's. Every once in a while, you'll see me buy a stock that doesn't fit the criteria. Well, why is that? More than likely, it's on Warren Buffett's list. Okay, because I respect him as a what do you call it? What about DGRO? Wow, DGRO. Oh, wait a second. Let's finish up with Siri first. A year ago, Siri's at 48.06. Okay, 48.06. The high of the year, 58.03, and that was back in December. She bottomed out a week ago. Take a look, a week ago, on the 7th, 22.14. Look at 30 days ago. We're at 24. She jumps up to 26, drops down to 22.14, gapped up on Monday, and kept on going today. Okay, at what point is she going to turn around and start having profit taking? Well, look at the numbers. 22.14 to 27. That's a $5 move. A $5 move on a $20 stock is a 20% move. 20, 25, somewhere in that area. That's a good move. Okay, so when there's profit taking, that thing's going to drop. And I'll put Siri on next week. No, 2 weeks. We'll look at Siri again in 2 weeks. Siri, 2 weeks from today. Okay, Mavudi. Is that right? Muvadi? Is that right? Mavadi? DGRO. DGRO. Oh boy. Can you do me a favor? No more ETFs. No more ETFs and no more monthlies. If you don't know the difference between an ETF and a monthly, or, okay, you're really going to do some research on where you're putting your money. Seriously. Bitto, hell no. Andrea, I'm a gown queen since you've been training me. I have no idea what a gown queen is. I'm the gown queen. Okay. NEP. Isn't that Nextera? NEP? NEP. Nextera. Okay, I was right. Not one I trade all the time. Is that just converting? No. Yeah, it is. Okay. All right, NEP. I don't know. It looks like a 50-50 because 18, 25, 1. Okay. Anyway, here we go. Here's the high, 35. The bottom's at 21. Okay, she jumps up, channeling. Okay, channeled from December all the way until May. Made the high at 35. Drop down, back up, back down, back up. Okay, I like the movement. The movement looks good. Okay. 25.79, the 26s are going for 65 cents. Nice. That's over 2.5%. Nice, that's a good pick. Well, let's take a look at it. Simone! Oh, Simone, we already looked at Walgreens today. Sorry. Okay, so last 30 days. Here we go. Last 30 days. Nice. Look at that movement. This is what I like to see. 30 days ago, we're at 25.50. We shoot up to 28.25, drop down to 24.75. 2 days to the upside. Great. Now, I'm not 100% happy with today, because today pulled back a little bit from yesterday's close. What does that mean? Well, what does it normally do this time of year? For that, we look at the seasonality chart. And for those of you who don't know what a seasonality chart is, here we go. All the way to the left, January 1st. All the way to the right, December 31st. The blue line is this year's movement. See it? The little blue dot right here, that's today. The red line up here, that is 10-year moving average. 2014, 15, 16, 17, 18, 19, so on and so forth. They put one chart on top of another to give you the average movement. That's what it looks like. Okay, this is the area that I want to see right here. This is the end of October. Okay, we are currently in week number 3 of October, or week number 3 for the 4th quarter. This is what she's going to do hypothetically. When I say hypothetically, this is just historical movement. This is what it did last year, the year before, all averaged out. Well, as you can see, it's slightly to the upside. That is awesome. I like slightly to the upside. We're coming into the we are into the 4th quarter, and it goes to the upside in the 4th quarter. Great. Love it. All right, back to here. Let's collapse that. Last 30 days. Here we go. Plain and simple. That looks awesome. Up, down, up. Okay? So, 25.79. The 26s going for 65. That's more than 2%. Let's do another trade. Just for the fun of it, for those that just got here. We want to get rid of this. Now, we like it, the 26s for next week. We want to change that signal to covered. Do the 26s. Here it is right there. Just do 100 shares or one contract. Change it to the market. Now, for those of you who think that I'm going too slow or too fast, this screen right here, what you're seeing here, is live on YouTube. So you could, hypothetically speak, Joe Sullivan, I didn't skip FDX from Galant's. Okay, we did look at FDX already. So as I was saying, this screen right here is live on YouTube. So you could, hypothetically, sit in front of your computer and look at it, because it's on YouTube right now, live. Or, if you have the ability, you can watch it on your big screen TV. Because most cable stations now have YouTube. Cool. Anyway, that being said, here's the trade right here, and I'm going to read it to you. I'm going to go a little quicker this time because last time I already explained it. If you don't understand it, watch the video over and over because it is recorded and you can watch every single video I've done since the beginning of January. So they're all saved on YouTube. All right. By one, covered NEP 100s. Those are the weeklies. 25 October 24. That's next Friday. Not this Friday, next Friday. The 26th call option against the NEP stock at the market price to open. My break even, $24.89. My maximum profit on this particular trade, $110. What is the trade costing me? $2,500. Let's do some math real quick. Math real quick. Here we go. $110 is my profit. $110.50. All right. Now, what's it costing me? $2,490. $2,490. What rate of return is that for? Uh-oh. I didn't do that right. Hold on. Let's do it again. See? I hit the wrong button. I told you, most people lose money by hitting the wrong button. What did I do? I hit the wrong button. Let's go. Try it again. $110 divided by 2,490. That is a, holy shit, 4.4% trade. That's 4.4%. For 1 week. Yeah, that's going up to next week. All right, that's not this week, that's next week. Okay, all right, next week, all right, 4.4. That's cash. Well, let's see what a margin account looks like. 110 bucks divided by 1208. 1208. 9%. Oh, hell, I'm going to do this one tomorrow. NEP. Okay, I like NEP. Why not? NextEra Energy. Get out of that. Get out of that. Go back to this. Saying, okay, cool. So, couple of questions. Question number one. Do I know what NextEra Energy does? Do I want to buy NextEra Energy and hold on to it for however long I need to reach my goal? Well, what is my goal? Well, my goal is a consistent cash flow. What if it doesn't make it? Well, they consistently increase their dividends. They consistently share their profits with the shareholders. When you buy a stock, you are a shareholder. Plain and simple. You are entitled to a portion of the profits because this company here decided not to take the profits, put it back into the company. They decided to take the profits and share it with the investors. That's you and I. Well, great. I like that one. So I got two for me tomorrow, PPG and NEP. Okay, cool. What do we have next? Hey, Simone, we already looked at Walgreens. Sorry, kiddo. YouTube good now. Yeah, YouTube, this one, okay, this one's working fine. It's the other one. I have two YouTube channels. All right, so the other one's not working at all. Techno Nerd, NEP, okay. Now, we just looked at NEP. We also already looked at Ford. We already looked at Walgreens. What else we got? Jaron, I don't do coins. Okay, that is cryptocurrency. Yeah, I don't do that. Sorry. Andrea, today was a great day for all the investors who had WBA in the $8 range in the low 9s. Yep. Jose Gray's 22. Kane. What the heck is Kane? C-A-I-N. Kane. Oh, that's a no. That's what that is. CSIQ. CSIQ. Canadian Solar. Interesting. Okay. Canadian Solar. Why not? Here's the high. Here's the low. Here's where it was. Here's where it is. Here's the direction. Up, down, up, down, up, down. Okay, it's going to be a no because I want to find the bottom first before I jump in. 1261, 1266, the 1250s are going for 60 cents. Holy cow. Can that be right? This week, the 1250, 30 cents. Cool. You can get 2% for this week. There's only 3 days left. There's got to be something wrong with this. Let's take a look at the dividends and see how well they look at how well they pay dividends. CSIQ. CSIQ. Yeah, there are no dividends in this time frame. Why would you come to a dividend investing channel, dividend investing for cash flow? Why would you come to a dividend investing channel with a company that doesn't pay dividends? You need to explain that one to me in a manner which I'll understand. Okay, so CSIQ is a no. Sorry, dude. All right, Slacky, Costco. Isn't Costco out of our price range? I think it's out of my price range. Yeah, hell no, dude. Look at that. Okay, here's the high of the year. This is where it is. $8.95. $8.95s are going for $6. Yeah, that's a no. $8.95 next week. 11. Okay, that would work if you like Costco. All right, well, let's look at the chart, see what it looks like. I don't want to say no to you guys, make you feel bad, but it's out of my price range. I mean, look at it. Seriously ask yourself this question. If a year ago it's at below around 500, and now it's at 894, what makes you think these people aren't going to take profits and this thing drops? I sure as shit wouldn't buy that. Look at it. The bottom's way down here. The top is right here. Okay? That is not in my favor. And it's out of my price range. $900 a share? Yeah, no thank you. Can you take a look at APLD? Okay, Scotty. APL. What the heck is APLD? APLD. Applied Digital Corporation. Interesting. APLD. Oh boy, not another one. There are no dividends in the time selected period. No. Sorry, dude. Alright, CSIQ. Jose, where you looked at that one? Andrea. I know Hertz is a no, but at a 5-year plus low like Walgreens. Okay, Andrea, you actually got to tell me what the ticker symbol is. Because if I've never traded the stock before, I don't know what the ticker symbol is. Is it HTZ? HTZ. Why the hell would I know that? Okay. Interesting. HTZ. Oh, come on, Andrea. You've been here long enough to know if no dividends means no. Okay, so the high of the year was 1151. Here we go. Okay, the 16th right there. Yeah, Andrea, if you really like this one, I mean really like it, look where she was 30 days ago, $3. She was all the way up to $3.90, down, up, down, 1, 2, 3, 4, 5, 6 days in a row. Okay, Andrea, if you really like this one, wait it out. Find your 30-day bottom, wait for it to turn around. So currently it's at $2.95. The 3 is going for 10 cents a share. That's a 3% trade. Okay? Next week's 3 is going for 20 cents a share. That's a smidge below 7%. Okay? But I definitely would wait to find the bottom. Wait till you find the bottom before she turns around and goes back up again. And then double check and see what the book value is. Okay? Well, let's check with the book value. Why not? Book value on Hertz. Wow, look at that. Andrea, take a look at that. The book value, $6.39 per share. Well, the stock is trading right around $3 a share. That's a deal and a half. You know what? I might even take a look at that one. HTZ. Okay, HTZ. I'll take a look at it tomorrow. Why not? I like it when a book value, okay? I like it when the stock is at $3 and the book value is $6.14. I mean, how can you go wrong there? I mean, people are buying, what the heck is that one? Hold on. NVIDIA. NVIDIA was at $1,200 a share. The book value was $2 a share, but people were still buying it. What the hell are people thinking? Yeah, people made a lot of money, and people lost a lot of money on that. Anyway, Chief Redbeard, thank you for following along. Gova Sports, how often do you keep dividends with your options? Okay, Gova Sports, you're new here. I'm really good with names, especially when you sign in. I only trade dividend stocks, preferably. Okay, every once in a while, I'll make an exception if it's on Warren Buffett's list or another big investor that I respect. Okay, but I don't usually capture dividends. I like the premiums because if you take a look at the premiums are usually higher than the dividends. And the premiums I can do on a weekly basis. That's why I like weekly options. I can do a premium on a weekly basis. And the dividends only come out once every 90 days. So I use the dividend to tell me when the stock is going to move. Because just before we haven't even done this tonight yet. Okay, so here's one of my list of stocks. Now, anytime you see one of these little green dots on my list, this is exactly what I'm buying. Okay, Kinder Morgan, Citigroup, Ford, Intel, British Petroleum, IBM, Siri, Visa, Wells Fargo, Raytheon, Hershey's, Walmart, Starbucks, Emerson, ExxonMobil, Kroger, Clorox, blah, 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 the rest of them. So, the little green dots, they represent the EX dividend date. Now, there are 4 dates to remember when you're investing. There are 4 dates to remember when you're investing with dividend stocks. Date number 1 is the announcement date. Hey, this is so-and-so from such and such company. We have a dividend coming up, and it's going to be paid out on this date. You will get your check on this date. The announcement date. That's date number 1. Date number 2 is the EX dividend date. That is the last day the stock trades before the dividend is paid out. Date number 3. Oh, by the way, the little green dots right here, those are the EX dividend dates. So if you want to collect a dividend on any one of these companies, you have to buy it before the date. So here's Kroger and ExxonMobil. So if I want to buy Mobil and capture the dividend on Mobil, I got to buy it before the 14th. That's the 14th, the 13th, the 7th, the 31st, the 1st, the 30th, the 29th, the 13th, the 12th, the 6th, the 5th. Any day before that day right there. I like doing that. That's weird. All right, anyway, date number 3 is the date of record. Whoever owns the stock on the date of record is entitled to the dividend. That's it. That's all. Date number 4, the payment date when you actually get your money. So I buy a stock before the EX date, because before the EX date, the stock has a tendency to go up in value. A tendency. It's not guaranteed. That means usually before the EX date, the stock will increase. So I like to buy it 2 weeks before on a Monday. And the reason why I want to do that on a Monday is because I like to buy the stock and sell the option against it, because the option is usually higher than the dividend. So if I buy ExxonMobil, I'm buying it on the 29th. Okay? I'll buy it at the market, at the open. As soon as it fills, I will sell a covered call against it at the exact same price I paid for it. And 99 times out of 100, that premium is higher than the dividend. Okay? So, if I buy it on a Monday, I sell a covered call against it on a Monday. Hopefully by Friday, somebody will buy it from me. And come following Monday, the 5th, I'll be back into all cash looking for another victim. What do I mean by that? Well, look at them all. Okay, this week here, Citigroup, Ford, Intel, British Petroleum, IBM, Siri, Visa, Wells Fargo. Those are the only stocks I want to look at that week. I don't want to look at Kinder Morgan. I don't want to look at Kroger, Baxter, Target, Aflac, Johnson. I don't care about any of those. These are the ones paying the dividends this week. These are the ones I want to look at. I don't want to be in front of my computer all day. Remember, it was created for a 9-year-old. Simple, safe, predictable, consistent. It was like, honey, this is what we're looking at this week. That's it. And then we have our fallbacks. What is a fallback? Well, a fallback is a company we consistently buy just for the premiums. Don't mean they have a dividend coming up, but they have a good premium. Okay, it's one I just keep on rolling and rolling and rolling. Okay, this year it was Macy's. Macy's consistently gave me 1, 2, 3% every single week. And it did it until it stopped doing it. Okay? Okay, so Gava Sport, hopefully that answers your question. Let's keep on keeping now. What do we got? Okay, Jose, you asked me 3 times of a CSIQ. I said no already, and I don't know why you keep asking. Which stock was it that jumped? Siri, S-I-R-I. If your call expires out of the money, do you sell another call next week at same strike? All right, Big Pippin. Ooh, remember that song, Big Pippin? I mean, Big Pimpin'. Oh, I'm thinking in my head. Big Pimpin'. I'll sing it for you later. I forget the name of it. Big Pimpin'. That was a fun. It was a. I like that song. It was a good one. So that being said, we're done with this one over here. So that's my video for the day. Video for the day. Okay, so. Okay, so Big Pimpin'. It's all going to depend on the numbers. Now, here's a few things. When you buy a stock, that number never changes. Okay? You will always have your entry price being the exact same. So here's an example right here. Hertz, currently at $2.95. $2.95. That will never change for as long as I own it. So what I bought it for doesn't change. What does change is this right here. Up, down, up, down, up, down. The stock value. Purchase price is one. Value is a different. Okay? Then you come over to the premiums and the strike prices. What can I sell it for to someone else using a covered call? Covered call is one of the safest strategies there is. So if I buy it here and I sell this, come Friday, it's either in the money or out of the money. I'm either back into cash or I get to write another covered call, one or the other. That is a Friday afternoon question. I cannot answer that question at this moment because we don't know what it's going to look like. But it is a mathematical problem, or mathematical solution. What did I buy it for? What is it currently at? What's the closest strike price? What is the premium I'm going to collect? What is the risk-reward ratio to that? Okay? There are a lot of variables on a Friday afternoon. So I have a morning trading group, Monday, Tuesday, Wednesday, Thursday. We're on at 9 a.m. until when you guys are done asking questions. Yesterday we were on until noon, from 9 to noon. That's 3 hours just answering questions. Okay, fine. That's what we're here for. Okay? This morning was only like 40 minutes. We got in, we got out, we saw everything we needed to see. Great. But Friday afternoon, we jump in at 3 o'clock because the market closes at 4. Now, if we have 20, 30 people in the trading group and they all have their positions, they may all have questions that they want answered before the option expires on Friday afternoon. That's a question I can't answer until it comes Friday afternoon. Jose, this is the 4th time you've asked me about CSIQ. I've said no 3 times. Is it 4 times saying no? Get through. CSIQ is a no. Sorry, I'm terribly sorry. Inspire me more. How are you doing? Ooh, Andy, MicroStrategies, MU. Let's take a look at that one. I actually own some MU. I bought it yesterday. Okay, so here we go. High, low. Where was it? Where is it? What's the direction? Up, down, up. Cool. 104.73. So the 105s this week's 158. That's still over 1% for this week. That's cool. Next week, over 2%. I like 1% a week. MicroStrategy works. Okay, so last 30 days. Check it out. 30 days ago, we're here at 86. Jump up to 114. Do a little hoopty. You like that? Technical term, hoopty. Hoopty. Now down, up, down, up. Now she's coming down. So it's not going to be good this week because apparently it looks. See the highs here and your low is way down here. It looks like she should be coming back down. Don't know until it does. Okay, we're almost at 11 o'clock. We've got a half hour left and I got a whole bunch of questions to go through. So if you really like it, that's what you're looking at. Now, I already bought some this week, and I just keep my eye on it and see what it's going to do. Inspire me more. Walgreens earnings going to let me leave a 2-month long position as long as profit taking isn't too bad. Tell you, that ginger tea really helps out with the coughing. John Jacob Jingleheimer Schmidt, his name is my name too. Whenever we go out, people always shout, there goes John Jacob Jingleheimer Schmidt. That's a cool name, dude. But thank you. All right, Flipper wants to say, wow, we haven't looked at Starbucks in a while. Weeks and weeks we haven't looked at Starbucks. Now, interesting thing about Starbucks, you see this gap right here? They call this a black swan. Now look, black swan there, black swan there, and black swan here. A black swan is basically an event that nobody actually seen. Why do they call it a black swan? How often have you seen a black swan? Something you hardly ever see. That's why they call it black, because it's something you hardly ever see. Okay, 1, 2, 3, 3 times. I actually bought it right here. Okay, the very next day she drops down to here. That was very uncomfortable, but hey, it happens. You're going to buy something, it's going to drop. But I did make money off of it, and I did sell it for a profit, so that's okay. A Rich Bruner on 2.2% over 10 weeks. That's a little over 2 months. I have no idea what that means, Rich. And it doesn't sound good. But 2% in 10 weeks, that's 2 months. That's 1%, 1.1% per month. That's horrible, Rich. What are you doing wrong? All right, let's finish looking up at Starbucks. Okay? Here's the high, here's the low, here's where it was, here's where it is, here's the direction up, down, up, sideways. We're currently at 95.04. Okay, so the 95s are going for 93 to 115. You might get your 1% this week. Look at it. 93 to 115. There's the possibility there. Next week, most definitely. Okay? So, what does it look like? Last 30 days. Interesting. 30 days ago at 98, drops down, back, look, it gapped up. Okay, it hit the high at 99 and change, drops down to 93.75, something like that. Now she's going to the upside. Well, that looks good. I mean, look at it. Okay, down, up, down, up. That's what we're looking for. A good quality company. You have to ask yourself, do I like Starbucks? Do I like Starbucks at this current price? Can I see myself owning Starbucks for the long term? It's either yes or it's a no. That's basically all it is. It's a yes or a no. Do I like Starbucks? What does Starbucks usually do this time of year? Well, you can't really mistake that for anything else. Look at it. Here's where we are right now. So you can go sideways, you can dip a little bit by the end of the month. And then from the beginning of November, holy cow, we're almost into November already. Look at that movement in November. I'm going to write Starbucks down for next week because that looks freaking attractive. So we're going to look at Starbucks again next week. Okay. Gen Xer. Ooh, 64, brother. I'm a Gen Xer too. We just don't give a rat's ass about anyone's feelings. We want to be left alone. I'm all for it. Do you bother to diversify since you're holding an option only for a week or load up on 1 or 2? That's a good question. Now, I have 6 different accounts, so yes, I have some diversification. I always tell people to diversify, have at least 5 positions, at least. Now, I do it for the week. You know, I buy it on Monday. I like to be out on Friday. Does it happen all the time? No. As a matter of fact, the longest I've ever held anything is 9 months, and that was Kimberly Clark last year. So my 3 big losers last year, Kimberly Clark, held it for 9 months. Target, held it for 6 months. PPG, held it for 6 months. This year, Wynn, W-Y-N-N, I've held it since May. I'm on month number 4. Don't make me happy, but at least I'm bringing in something every single week. Every single week, something comes in on, and I get the dividend. That's why I like dividend stocks, because when the stock comes down, and it's not an if you think you're going to buy something and not going to lose or not going to go down, you're sadly mistaken, because they only go 2 ways. They go up and then they go down, and then they go up and then they go down again. That's all they do. Okay, every once in a while they'll gap, and that's very uncomfortable. So, Rich, you and I are going to have to chat. Okay, I don't know why you're only up 2.2% in 10 weeks. Okay, I don't know what you're doing, because you've been here long enough to see exactly what I do. And you've seen the returns that I'm getting. Okay, last week, well, what was that? Week 36. Week 36, 3.6%. Week 37, 1.8. Week 38, 3.6. Week 39, 2.3. How can you possibly be at 2.2 after 10 weeks? All right, I don't know. I'll have to take a look. What percent of your options are made with margin? All of them. Well, you can't do margins on option. You can only do margin with stocks. So if you buy the stocks on margin, then you can sell options against them. But you can't do options with margin money. It just doesn't work. I mean, not that it doesn't work, they just don't allow it. Hey, I'm graduating high school this year and wondering, is trading a full-time career? It could be. Look at it this way. If you get financial aid to go to school and they give you what, $150,000, $200,000 to go to school, yeah, $200,000 at 1% a week, that's $2,000 a week, which is $100,000 a year. And if you do it on margin, that's $200,000 a year. But who's going to give you the $200,000 for not going to college? Scott Whitney, you want to take a look at Citigroup. I love Citigroup. And we haven't looked at Citigroup in a while. And it's a no today. Sorry, dude. Look at that. That's at the high of the year. And it had a big pullback. Yeah. That is a perfect candidate to put down for 2 or 3 weeks. So let's go through the numbers real quick. Year ago, 41.26. Dropped to 37.91 is the low of the year. Okay, the high of the year, 67.75, kind of dropped right here, back up, back down. Now, here we go. Take a look at the last 30 days. All right, so Scott, take a look at this. Last 30 days, 58 to 67, big drop down to 62. Okay, look at the volume. The volume is double, close to triple on some of the days. Okay, the blue lines down here is volume. Okay, look at that. So, hypothetically speaking, with a big drop like this, now, this is going to be a little disturbing for some of you tender people, but this is what you call a dead cat bounce. When it drops like that, more than likely, she's going to bounce back up tomorrow with a big drop like that. Aren't dividends taxed as ordinary income? Miss Slightly Geeky. Okay, if you're asking me a question about taxes, I'm going to ask you very nicely. You need to talk to a tax strategist or a tax planner. Okay, a tax strategist and a tax planner will show you how to do your trading, how to set up your financial life so that you do not have to pay taxes. Okay, taxes are strictly voluntary. Do some research. Wait. Some taxes are voluntary. Okay, federal taxes, you got to pay those. State taxes, you got to pay those. Income taxes, you don't have to pay. Those are strictly voluntary. Do your research. All right, so Scott, we're going to keep our eye on Citigroup because I like Citigroup. We'll write it down for next week, and we'll take a peek at it again next week. You know, the funny thing is, okay, this list here are all the stocks we said that we would take a look at this week. And I've only looked at 6 of them so far because you guys keep hitting me up with this stuff to look at. There could be some good stuff in there, you never know. What the dividend yield for Ford F1? Okay, Maddie, I don't know what the yield is. Okay, because I don't look. I look at things a little bit differently. When I invest for weekly cash flow. So my yields are a lot different than others. See, when you're talking dividend yield, you're thinking of, well, if I put my money in this at the end of the year, what am I going to get based on historical performance? That yield is something I don't ignore. I don't even pay attention to that anymore. I take a look at where is it currently at right now. What can I sell it for? Okay, so 62.98 to 63, they go for 59 cents to 63, not quite what I want, but down here, it's 99 cents. That's 1.5%. 1.5% per week. Okay, that's over 50% yield per year. So I look at the current price. What can I buy it for? What can I sell the covered call against? What kind of premium can I collect? That's half the equation. The other half of the equation is, where's the 30-day bottom? Where's the 30-day high? Where's the stock moving to? What does the stock normally do this time of year? I like to have the odds and probabilities in my favor. Okay? Okay, 80% of all options expire worthless. I don't want to be an option buyer. I want to be an option seller. I like having the deck stacked in my favor. All right. So, King Kong, interesting name. How do you feel about SBLK? Nope. They are about 70 cents a share. Dry bulk sector. Nope, nope, and nope. Sorry. Yeah, so slightly geeky. Yeah, you need to talk to a tax strategist. All right. And yeah, you're right. They are taxed as ordinary income. Bam Bam 500. CELRUSD. Okay, that is a Forex. That is wrong. You're in the wrong station there, honey. You need to go someplace else. Not saying that I don't want you here. Maddie, 23, Google, hell no. Ooh, Craigaffey. Carnival Cruise Line, huh? Nope. Okay, we'll take a look at it in about 2 weeks. Okay, now the reason why I'm saying we're taking a look at 2 weeks, look at where it is. This is the high of the year. Nice run. Look at it. Up, down, up. All right, what's coming next? When you see movement like that, okay, here's profit taken here. Okay, it was 16, came up to 19. Okay, profit taking down here to 17.5. Now it's up to 21.5. Well, there's going to be profit taken again. When that happens, that's when I want to take a look at it. And that looks as if it should be 2 weeks from today. So we'll take a look at it again in 2 weeks. Thoughts on DJT? Well, why don't you come and ask me my thoughts on DJT when they have 20 years of dividends? Then I'll take a look at it. Maddie, Alphabet. No. Alphabet only has 2 dividends that they've paid. Now, I looked at it 2 weeks ago. 2 dividends. Not 2 years, not 2 months. 2. Yeah, I will look at Alphabet in 19 years. Okay? Other than that, no thing. Or once Warren Buffett starts buying it. Oh, shit, that hurt. Oh, yeah, I hurt myself playing soccer again. So, is what it is. Okay, Bama Redneck, the Bears love Trump, but in my opinion, it's still too much on the mean side. But you can make money. Yeah, you can. But you can also lose your ass. Yes, you can. Coin. Ooh, isn't that Coinbase? Isn't that something to do with Forex? Okay, coin. Interesting. 196. The 196.50s, the 197s. Okay. Okay. Well, the premiums are so high. I'm betting. I'm a betting man. I'm betting they have no dividends. When they have premiums that high, COIN, coin. And there it is, Coinbase, blah, 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 blah. Let's look at historical data because we want to see what kind of dividends they've been paying. Prices, dividends only, and there are no dividends at this time frame. No dividends, no thank you. I like dividends because dividends tell me when the stock is going to move. And when I know when the stock is going to move, I want to make sure it is in my favor. So coin is a no. Rick, when options get called in on Friday, do they sell FIFO, LILO, or lowest cost first? First in, first out, last in, last out. Okay, Rick. When the options get ready to expire, they actually expire on a Friday. Sorry. They actually expire on a Saturday, but the last trade you can do is 3:59 on a Friday afternoon. So in actuality, you can't do anything after 4 o'clock anyway. So we look at them starting at 3 o'clock because we want to make sure our trades are going to be profitable, and we want to set ourselves up for next Monday to be in a better position. Okay, so that's a question. That's a 3 o'clock Friday afternoon question. So I can't answer the questions of Friday afternoon, and today's Tuesday. So it's all it's different. Every single stock is different. Okay, what did we buy it for? What strike price did we sell? Where's the current price right now? What is the value of the option? Is it in the money? Is it out of the money? Do I need to push it forward? Do I let it expire, or do I buy it back? There's a lot of questions I need to ask. So first in, first out that doesn't really apply. Last in, last out doesn't apply either. Okay, it's all individually. Okay, YouTube is not loading and still upcoming. Yep, I get that. Do you like Amazon? Nope. EBT? Nope. It's stolen like $400 from me alone. Okay, so I don't do Amazon because Amazon doesn't have dividends. I played the Delta earnings report. Do you see it moving away one way or another in the morning? Delta, is that DEL? DEL? No. DAL. DAL. Now, okay, that's plain to see. Down, up, down, up. It's definitely going to be a no for me because it's at a 30-day high, and I don't buy at a 30-day high, and it's already started to come down. 52.85 would be looking at 53s. Okay, the 53s look good for this week, and for next week they look good. So why is Delta so high? So let's go and find out why. DAL. Okay, so Delta Airlines has only been paying dividends for 11 years. No, I like 20 years. But look at the dividends. 6, 9, 14, 20, 31. Looks great so far. 31, 35, 40. Looks awesome. And then all of a sudden in 2020, they cut it 75%. That was 3 years ago. They cut it 75%. Okay, 10 and then 15. Okay, so they're starting back up again. They only have, no. Sorry, the numbers just don't look good. But if you really like Delta Airlines, I would say wait 2 or 3 weeks for this thing to drop back down here. Wait for it to turn to go back up again. Because that's all it does. Up, down, up, down, up, down, up, down, up, down, up, down, up. Okay? Yeah. YouTube stream not loading. Yeah, I get that. Mark Sherman wants to look at Wynn. WYNN. Ooh, nice big drop today. I like it. The reason why I like it, because I actually have some WYNN. Okay, high, low, where was it? Where is it? What's the direction? Up, down, up. Now it's coming back down again. Great. Okay, so it's not a contender this week. I would wait a couple of weeks for it to drop. Okay, for the drop before I think of getting in. I already own it at 87. but I sold the 77s 3 weeks ago, and I had to push it forward because I have no desire to lose money on it. What do I mean by that? Well, I own it at 87. You would think I'd be happy, but no. I bought it at 87, okay? It dropped down to 75, and I sold the 77s. So it jumped up so quick, I didn't have a chance to roll it forward. But when I did roll it forward, it kept going up, 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 up. So now I have to wait for it to come all the way back down, buy back that option, and then follow it back up again. Okay. There's no dividends. It's a no. ARMK. Kivo Gmo. ARMK. What the hell is that? ARMK. Oh, I know what that is. That's a no. It's a monthly. I don't like monthlies. I'm pretty sure Misty's a monthly also. MSTY. Oh, yes, Misty's a monthly also. That's a no. Rude dude, what's happening? Bobby Bok Choi, how are you doing? October 25 is Friday. Yes, it is. All right. Mud Dog. Mud Dog wants to look at AT&T. That's going to be interesting. Take a look. Here's the high, here's the low, here's where it was, here's where it is. Look at the direction. Up, now it's pulling back. 21.59, the 21.50s are going for 16 for this week. No for this week. But next week, 54, that's 2%. That works for me. But let's take a look. The last 30 days, interesting. Look at that. 30 days ago was the 30-day high. She dropped, back up, back down, back up, back down. Now she's going to look at this gap here and a gap here. Well, this gap filled. Now we're going to fill this gap. All right, well, here's the bottom. 1, 2, 3 days to the upside. Perfect. Perfect setup. That's what I like. What does AT&T normally do this year? Now, we all know that AT&T doesn't do it. Wow, look at that. We got a little bit of a pullback here. So at the end of the month, that's going to be a lovely play. And how does this current situation play into this one? Well, take a look. Here's the current situation. 30-day high is 22.30. She dropped down to 21, shoots back up to 22, back down, back up, back down. Now it's a slow incline. Perfect for next week. All right. That being said, what books or videos do you recommend for starters on investing in stocks? Tony, how is your day today? All right. Well, there's tons and tons of videos out there on YouTube. Okay, first thing I'd suggest you do, take a look at hold on. Covered call. What is a covered call? What's the pros and cons about it? Is it safe? Is it not safe? All those kind of interesting questions you want to take a look at. Okay, fine. Books. One book that I liked that was simple as an easy read was The Wall Street Money Machine by Wade Cook. It's a simple, easy book, easy to understand. And once you read it, you say, holy shit, that makes sense. All right. Would you want to live in, girl? Okay. World you want to live in, girl. Okay. 2.4% over a week and a half is pretty big. Okay, that's good. Gerald Pitti. I own Philip Morris, Altria, Verizon, I hope to have enough dividends to pay my house taxes in 2026 when I retire. That's a statement, that's not a question. Austin, dude, showing up for the last 19 minutes, or 11 minutes. Paul, Gerard, use this method to pay your taxes, get 1% per week bag, better than dividends, cool beans. Any mammy, hey mammy, okay. FXAIX, yep, no. I got Philip Morris at 92, cool. DVA, what happens when the stock drops and your option expires? The stock drops and the option expires. Well, then you turn around and you sell another option against the stocks that you have. But bear in mind, keep an eye on the movement in the direction. New subscriber, cool beans, yay! All right. Anyway, that being said, yeah, just take your time and make sure it makes sense. If you buy a stock, let's say AT&T. Let's say you buy it at $21.59. That's the current price now. Okay, you sell at 22 against it, great. You get your 1%, wonderful. Now she drops down to 15. Well, you don't want to sell the 15, that's too close to where the stock is. You don't want to sell the 22 because it's not enough money. So you sell something like the 16, the 17, or 18, depending on which way the stock is moving. Okay, you always get it. Now see, I'm here twice a day, in the morning and in the evening. So I have a good grasp of where my stocks are and where they're moving to. So I'm not too concerned about it. But if you know, it really would depend on how much time and how much effort that you're going to put into it. If you're going to look at it every day, well, good. You can do something more risky. If you're only going to look at it once a week or once a month, well, then you want to do something with no risk. Gerald, you can make way more than just collecting the dividend and hope for appreciation. Yeah, thanks, Paul. DVA, if the stock drops, you keep the premium, you roll it into the next week, and you collect the premium again. Oh my goodness, that sounds like something I would say. Nice going, Paul. Coinbase, lost connection. Coinbase is a little too new. Nvidia, hell no. Carnival Cruise Line, we already looked at that one. Where are we? I'm a slacker at 2.2, but I'm up 340,000. Oh shit, dude, where's my cut? Energy transfer. Oh, see. Now, energy transfer, I'm a little fickle on that one because, no, and I'm going to show you why energy transfer. ET. Now, energy transfer looks like it has everything you want it to have, but look at the premiums, at the money. Currently, right now, $16.45. That's the stock price. The closest strike price will be the $16.50. The $16.50 is right here. Look at this, 3 cents. Yeah, no. Next week, $16.50, 9 cents. Yeah, no. But when you go one strike out, it's 2 cents. 2 strikes out, it's 0. The premiums for energy transfer are absolutely horrible. I don't think I've ever bought energy transfer. DVA wants to take a look at Riley. R-I-L-Y. I actually own some Riley. I do. All right, Riley. Hi, hello, where was it? Where is it? What's the direction? Down, sideways, up, down, and then it's bouncing off of here. Okay. Currently at 5.05. The fives for this week, 20 cents a share. Wow, I'd like to buy some. Oh, I already own some. I actually own more than I should own. But, besides the point. This week, the fives are going for 20 cents a share. That's a 4% trade. Next week, the fives are going for 40 cents a share. That's 8%. Is that 8%? Yeah, that's an 8% trade. Why the hell not? Well, here it is. Do you like Riley? That's the big question. Does it make sense to you? Do you know what they do? Is this a company you can see yourself buying, owning, and holding for a long period of time? Because if it's not, well, then don't buy it. Don't buy something you don't understand. Don't buy something you don't want to hold on to for a long period of time, because you might have to. All right. What is this? What is the strategy? Is it buying option contracts? All right, K. Scott, no, I don't buy options at all. Options, 80% of all options expire worthless. Why would I want to buy them if 80% of them expire worthless? Think about it. 80% expire worthless. Don't I want to sell them? Because selling 80% of them are going to go worthless. Well, great, that works great for me. 20% actually make money. Well, I don't want to be in that 20% group. I don't. So if I buy a stock, sell a covered call, an option, to someone else, I'm a seller. 80% chances are in my favor. Well, that's where I want to be. So if I buy a stock at the current price, 505, I sell a call strike at 5. Okay? Yeah, I'm losing 5 cents right at the top. So you take it off there. So I'm walking away with 15 cents. Well, 15 cents on a $5 stock is a 3% trade. That means I make 3% for the week because it expires on the 18th, which is in 3 days. That's 1% a day. That's pretty cool. Okay? So, buy a good company, sell an option against it. If the option is going to expire worthless, great. You sell it, then move on to the next one. What minimum I need to put into a trade as a beginner? There is no need. There is no actual number. Everybody is different. Okay, everybody here, I can almost guarantee with a lot of certainty that we all don't have the exact same amount of money to start with. Okay, I started with, I think it was $12,000 20 years ago. 20 years ago. That's when I was 40. Holy cow, am I that old already? Damn it. Craig Free, you do all your trading in your IRA? Cool. Fairly 2X, let's look at some of those stocks on your list you wrote down for this week. Unfortunately, dude, there's 4 minutes left. Okay, and I still got a bunch of questions to answer. Now, I'm here to answer questions and to help people out. All right, so as I'm answering questions, the time ticks away. I have no control over that. So there's a bunch of them on there. So let's keep on going through the questions. Hi, I'm a sophomore in high school. Cool beans. And I have 1K at my disposal for stocks. Where should I start? Z, I'm going to be 100% honest with you. Sophomore in high school, congrats to you. You're looking for your future. Wonderful. Great. Now, $1,000. Let's do something fun. Okay? Fun. Something fun. Here we go. Alrighty. We're going over to my website, The 10-Minute Trader, and we're going to look at what is called a weekly compound interest calculator. Now, I'm pretty sure you never heard of one because I actually had to create this because it didn't exist before. A weekly compound interest calculator allows you to start off with a certain amount of money, make a commitment to deposit a certain amount of money every week, and do a certain type of trade every week. So if you're serious about it, great. Do 1-2 trades a week. Not that difficult. All right? You can actually even go on to Robinhood and like separate that $1,000. Let's say 8 or 10 positions. Okay, you're not going to be able to buy 100 shares of anything, so you'll be able to do fractional shares. So if you put 10 positions, you can do 10 stocks. Find good ones. Macy's, Nordstrom's, Kohl's, IBM, Home Depot, Lowe's. Find one that makes sense to you. Buy it just before the dividend date. Capture the dividend or the equivalents, one or the other. As it increases, then you sell. Don't look for getting big, huge returns. It always comes down to the movement of the stock. And the movement of the stock is sometimes very predictable. Okay? What do stocks do? They go up, they go down. Up, down, up, down, up, down, up, down. That's all they do. They do not come to your house and wash your dishes. They do not make the bed. They do not rake the yard. They do not trim the trees. They do not even take out the trash. Totally useless. They go up, they go down, and that's it. However, stocks have a tendency to go up in value just before the dividend date. Dividend date, you can find a EX dividend calendar by going onto Google and look EX dividend date. Just before the dividend date, the stocks have a tendency to go up in value. Let me show you one really quick. ExxonMobil, the 15th of August. 2 weeks before, on a Monday, the 29th. So I want to look at the 29th. The dividend for ExxonMobil is 95 cents. Alrighty, August, July. So, July 29th. XOM. July 29th. Where is it? July 29, right there. Okay, so here's July 29 right over here. Alright, now, pay attention. July 29, the number's up here. Okay, the number's up here. Open, high, low, close, range, volume. Okay, now, the 29th, see, here it is right here. ExxonMobil, 2 weeks before, on a Monday. I like to buy at the market open. The market opened up 117.32. That's the opening price. Now, what's the dividend? 95. So, I'm going to take the 95-cent dividend and I'm going to add it to the opening price on the 9th, okay? Which was 117.32. 117.32. And it comes to 118.27. So if I buy it on Monday morning at the opening, 29th, the opening price 117.32, add the dividend to it, my exit target is going to be 118.27. How many days before the dividend will it take in order to hit that price? Okay, so let's check it out. Okay, here's the 29th right here. It opened up 117.32. Our target price 118.27. So day one, the high is 117.39. Day two, 118.86. You see that? 118.27. Day two, 118.60. Stocks have a tendency to go up just before the dividend date. Here's the dividend date. 2 weeks before, on the 29th, you'd be out on a Tuesday. In on Monday, out on Tuesday, in this particular situation. Now, you may wait a little bit longer because look, it went up, it came down, it went up, it came down. So stocks go up, they go down. That's all they do. But here's the thing. 2 weeks before the EX date on a Monday, buy the stock, capture the dividend. The dividend, you're not actually capturing the dividend. You're capturing the 95 cents equivalence. It's the same thing. So do I collect the dividend, 95 cents? Or do I take the 95-cent run-up? Well, the 95-cent run-up was the second day. The third day, if you did what's called a stop loss, as the stock keeps going up, well, your stop loss actually goes up also, and maybe gets more than the dividend. But that's called dividend capturing 2.0. So if you take your $1,000 and you spread it out through 10 different trades, and you look at the calendar, and you pick, well, what stocks do I like? Well, I like ADM. Archer Daniels, Aflac, Target, Walgreens, Clorox, Intel, Ford, Kinder Morgan, Kroger, Emerson Electric, Hershey's. Take a look at all of them, whichever one makes sense to you. Now, let's get back to the calculator. So here's the calculator. You're starting out with $1,000. Okay? Now, let's say, hypothetically speaking, okay, you're a sophomore in high school. Oh, freaking cool beans. How much can you commit to invest on a consistent basis? $10 a week? $20 a month? $5 a week? Make a commitment, stick to it. Okay, let's say it's $5 a week. Okay, $5 a week. Okay, periodic deposit. $5. Whoops. $5. Now, I'm showing you how to get 1% per week. 1%. Let's go a little bit on the conservative side, because doing dividend capturing, let's say you only get 0.5% per week. 0.5. Okay? But you put $5 in every single week and you get 0.5%. You start out with 1,000, putting $5 a week, 0.5%, and then we get a time frame yearly. So let's do it for 10 years. See what 10 years looks like. Now, so let's see if we understand correctly. You start with $1,000, putting $5 a week, get a 0.5% a week, because the strategy I'm showing you is a safe, predictable, consistent 1% a week. And I created it for my 9-year-old daughter. You're a sophomore in high school. Yeah, you bet you're older than 9. All right, so you should be able to comprehend this. All right, so for 10 years, now let's compute the savings. In 10 years, you have $257,000. How much did you put in? Well, you put in $3,600. Okay? So let's go back a little bit. And let's say you stop drinking Starbucks. And you put in $10 a week. So now you get 381. Sorry, that's 38,000. Is that right? Yeah, that's 38,000. Okay, yeah, because you're only getting 0.5% per week. So if you bump it up to 1%, 1% per week, now you're at $350,000. How much did you put in? $6,200. Time and consistency along with a good trading strategy. Now, dividend capturing has been around for over 400 years. It's a very old trading strategy. You buy a dividend stock that pays a dividend, it's a portion of their profits from the company. Now, you capture that dividend, you reinvest it, and then you just keep compounding. And you keep putting money in every single week. Consistency and time is in your favor. All right. But yeah, that is a weekly compound interest calculator. If that's too much work for you, try the monthly compound interest calculator. Same thing, $5 a week. So let's put $5 a week. That's $20 a month. Okay, 1% per week. Okay, 10 years. So now you only have $20,000. Huge difference between weekly trading and monthly trading. Okay. All right, I got a few more questions. Let me know what you think. Interested in IB or M&A. All right, Z, I'm not quite sure what you mean by IB or M&A. How much capital do you recommend someone use to start investing? All right, K. Scott, I don't have a recommendation for anyone. Okay? Now, like I said before, most people spend more time planning a family barbecue or a date night than they do in their personal finances. Okay? So you have to decide what's comfortable for you. Because whether you want to agree to it, whether you want to admit it, you're going to retire at some point in time. whatever investment you make, it will have to give you enough money to retire comfortably. There's no ifs, ands, or buts about it. I never thought I'd be 60 years old. What the hell is a 60-year-old supposed to do? I have no clue what I'm doing at 60. None whatsoever. And someone, I know who it was, someone was stupid enough to make me a grandfather. Okay, so I'm actually a grandfather. Who would make me a grandfather? They call me Papa G. Papa G, yo! That's me. Anyway, but it's coming, whether you want to agree to it or not. So whatever you want to start out with is up to you. Mesh, how are you doing over there? And Coach Joel, how are you doing way over there? So you have to decide, how important is it to you? Is it really that important to go buy Starbucks every morning? Or take your girlfriend out to the most expensive restaurant every week? What you have control over is your time and how you spend your money. You can invest. Now, I heard stories that when Warren Buffett started out, he invested 70% of his money. 70%. And he lived off of 30%. He squeezed, he scrimped, and he did all that very frugally. And he got to a certain point. Okay, great. Now you have to decide what you want to do. Do you want to take 5% of your weekly earnings, 10% of your weekly earnings, 20% of your weekly earnings, and slowly grow it? This is not a marathon. I mean, this is not a sprint. This is a marathon. I have no idea how old you are, but at some point in time, you get 3 options when it comes time to retire. Okay, 1, you're going to age out, which means your boss is going to say, dude, you're just too freaking old. Aging out, it happens to everyone. 2, you can walk out. That's what I did. Walking out is when you have enough money that your investment's giving you a safe return on a weekly or monthly basis so that you don't have to work. And of course, number 3, you can toe tag out. Not ideal, but a lot of people do it. Okay, I know 3 people personally that I went to school with, toe tagged out. Do you know what that means? All right, let's keep on going. How many more questions do I have? All right, CRG. I'm not even going to look at that. I'm not looking at anything else. I'm just answering questions. Why don't you buy a put on the way down? That's a good question. Here's the thing. Now, there are literally hundreds of different trading strategies. Okay? Now, when I say I created this particular strategy for my 9-year-old daughter, it needed to be simple, safe, predictable, consistent, no way for her to lose. Now, you're new here, so you haven't seen yet. So let me show you quickly.
Hi, I'm Tracy, and me, as you being part of my internet website company, which my dad didn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks and
There's over 20 minutes in the whole chasing.
Okay, so that was my daughter, the first part of the video. This is me. I was better looking back then. I had more hair and less gray. Okay, so me and my daughter have been doing this for a long time. She doesn't do it anymore because, she did the girl team. It was me and her. We did it every week. Okay, we showed people how to do it. Now, it had to be simple, safe, predictable, consistent, and no way to lose. So when you start putting puts and you start putting more pieces to the puzzle, it becomes more complicated. Now, I love my daughter dearly, but when she was 9, she was not a Mensa student. She was not in the honors class. She was just a regular, normal, everyday little girl. It had to be simple. So puts were not part of the equation. And do I do puts nowadays? Yes, but I don't teach it here. Here I teach the exact same thing over and over and over again. I consider this trading strategy here that I'm sharing with you tonight a stepping stone, a simple strategy for you to get started. Okay? It is simple, it is safe, it's predictable, it's consistent. Covered calls are one of the safest trading strategies there are. You buy a stock, you sell somebody the rights to buy it from you for the exact same amount of money, and you collect a premium. If the premium's over 1% per week, well, that's over 50% per year. That's my goal. Now, I've been trading for 20 years. The first 5 years were a little rocky. At 9 years old, in 2008, my daughter jumped up on my lap and she says, Daddy, can you teach me what you're doing? I want to do it too. Well, that's my challenge. It had to be simple, safe, predictable, consistent, and no way for her to lose. That was my challenge. I came up with a strategy specifically for her. She was the original 10-minute trader. It had to be simple, it had to be quick and easy, and it couldn't be too complicated. So she had to be able to do it in 10 minutes. And it was a simple strategy. Let me show you really quickly. Okay? Here's a chart. Here's a calendar. So, Citigroup, Ford, Intel, British Petroleum, IBM, Siri, Visa, and Wells Fargo. That are the only companies we look at for the week. That's it. No more. Okay? That's simple. Honey, these are the ones we're going to look at. Tell me what you think. Okay, very first thing she do is put it into the chart. So let's put in C. Okay, that's Citigroup. Okay? Very simple. Citigroup. Where's the high? Where's the low? Where was it a year ago? Where is it now? What direction is it going? That's the first 5 things I want to see. And anyone can see it. I can get you a 3rd grade. Where's the high? It's right there. Where's the low? Right there. Okay? What direction is it going? Up. It's not difficult. Adults have a tendency to make this more complicated than it needs to be. It was created for a 9-year-old. If you can't get it, I can't help you out. Everybody here should be over the age of 18. It should be simple. Now, the calendar tells you which ones to look at. That's easy enough. The chart tells you where's the high, where's the low, where was it, where is it, what direction it's going. That's easy also. What's the last 30 days look like? Well, look at the last 30 days. Where's the high, where's the low, where was it, where is it going? Okay? Right now, this is a hell no, because it's at the high. Way too high for me. Okay? So, we go to another one. Ford. Simple. High, low, was, is, direction. Okay? Now it's going to the upside. Great. Here's where it is. That one looks good. So you look at the last 30 days. Here we go. All right. High, low, where was it? Where is it? Where is it going? Up, down, up. Cool. Simple. That looks good. So now that we know what direction it's going, what's it going to cost? Well, right now it's 1087. 1087, well, what's the closest strike price? Come on, a 3rd grader knows this one. What's the closest number to 1087? Well, it's 11. Don't make it more complicated. The 11. What am I selling it for? 6 cents? Nope, that doesn't work. Next week, the 11, 14 cents. Yep, that's over 1%. That's what I like. Great, now let's do the trade. Simple. First one, change it to covered call. Great. I like the 11s. It's right here. Cool. Let's buy 100 shares. Wrong way. There it is right there. Change it to a market order. I want it filled instantly. Now, here's the order. Buy 1 covered Ford 100s. Those are the weeklies. 25 October 24. That's next Friday. The $11 call option against the Ford stock at the market to open. Okay, great. What's my profit? 31 bucks. What's it costing me? $1,000.69. $1,000.69. Okay. So my profit is $31. I divide it by what is it costing me? $1,069. What's my rate of return? 2.89%. That's 2.9%. That's a no-brainer. That's a yes. Stop making it more complicated than it needs to be. It's not that difficult. Anyway, it's past 11:30. You guys have a great night. Who was that? That was my daughter. Great. F-O. Okay. What do we got? All right. Sorry, guys. Bully, 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 my brother, bully, bully. Okay, Scott, Whitney, I have no idea what that means. Mr. Wow, hi. What strategy are you using when trading stocks, technical, fundamental, or sentimental? Cool. Yeah, it's a trading strategy I created specifically for my 9-year-old daughter back in 2008. All right. Same bat time, same bat channel tomorrow night. You guys have a great night, and I will see you again tomorrow. Because the sun will come out tomorrow, wipe away the cobwebs and the sorrow, till there's none tomorrow, tomorrow. I love ya tomorrow.